Welcome back. Coming up on today's program, Bitcoin, rewards and risks explained. Bitcoin can cause a lot of confusion in the investing world and some opportunity. It can actually take your mind off regular investing like saving for retirement. But we're going to explore today how Bitcoin investments work from the perspective of an investor and as a citizen. It's a phenomenon in our society. So currency is a medium of exchange, a store of value, an asset with value, and a unit of account. Most of all, currencies have to have the element of belief and confidence. So my question to you today, and you can throw your comments into the comment section below, what is Bitcoin really for, and where do you think it's going? And viewers have been asking this. Recently, Richard commented on one of our other videos saying he understands that digital coin currency isn't really an investment in the same way a stock is. It's more like investing in gold and silver. It doesn't pay interest or dividends. And Richard, I think you're onto something. I think you've got the right direction. I was a gold investor during a volatile market, and I made and lost money. And Bitcoin investing has some of the flavor of that. Well, welcome to What's Next with Money, a program that holds the promise of second chances, strategies for growth, and financial empowerment. Well, let's get started. We're talking about Bitcoin, rewards and risks explained. And I've got a special bonus section at the end. Let's jump right into the rewards. As a virtual currency, Bitcoin is a digital representation of value. Now, we're going to cover blockchain in another video, and blockchain addresses the cost of trust. And blockchain sort of underlies Bitcoin. It's kind of the architecture. Now, many trading platforms deal in cryptocurrency. These are exchange platforms where you can buy, sell, and exchange for different currencies. But some may not use the blockchain architecture as extensively for security as others. And some of these new exchange platforms for crypto, there's very little recourse for fraud. Anonymity for Bitcoin is praised. And some trades are not reportable by third parties like with brokerage firms. So you can tell this is still a very new area. Now, one hope for Bitcoin, and some financial advisors and investment experts say this, that Bitcoin is a new asset class, and an asset class with a low correlation to other assets. And in asset allocation, you want investments that have different correlations, different relationships with other assets like stocks, bonds, and cash. So let's say as stocks zig, Bitcoin might zag, and this helps keep the overall health and balance of your portfolio up. Other asset classes include real estate and commodities, of which gold might be one of them. And we've got a YouTube video on asset classes and also on cash as an asset also. Now, Bitcoin is like the uncurrency, free of central government manipulation. And from our friends at Investopedia, let's go into what Bitcoin really is. Bitcoin claims that it is the first decentralized peer-to-peer payment network powered by its user with no central authority or middlemen. That lack of central authority is the primary reason governments are afraid of cryptocurrency. They like authority. And fiat is a term used to describe currencies issued by governments. So fiat currencies, like the dollar, is conventional currencies. And it's backed by the value of the governments. But they're not backed by anything else, just the full faith and credit of the government. So when Bitcoin came in, they were sort of, after the financial crisis, it was somewhat rebelling against that notion. Now, in a normative way, and one of the rewards of Bitcoin, it's actually legitimately taxed by the IRS. So that kind of puts it in a more of a legitimate category. Any profits you have from Bitcoin trading in a taxable account are taxable. It's considered property. So it's like if you bought or sold a stock, and the profits of that, if you've held it for a year or more are taxed at a capital gains rate, long-term capital gains. Less than a year, it's short-term capital gains. So we've talked about the rewards and some of the legitimate forces out there with Bitcoin. Now let's check out the risks. And risks do exist. First, it's new. It has a very short history. And this gives pause to some financial advisors and investment professionals saying, we don't know the long-term track record of this new potential asset. It's, again, more like owning actual physical gold. Bitcoin does not pay dividends. Bitcoin is a threat to other systems of currency, like in China. And China recently announced that banks and certain exchanges needed to curb crypto trading and related activities. And by them announcing that, that sent the price of Bitcoin way, way down. So this gave pause to its longevity as a legitimate asset class and is keeping some Bitcoin users from trading on certain exchange platforms. Also, digital currencies are generally unregulated, but their derivatives, like futures, options, and perpetual contracts, are regulated. And this happens in many countries, like the UK's Financial Conduct Authority. In the US, we have the SEC, Securities and Exchange Commission, and the CFTC, the Commodity Futures Trading Commission. But big forces, powerful forces and voices in Congress want those agencies and the federal government to set up new rules about cryptocurrency and especially the exchanges and trading. They want the government to decide what regulatory, this is an odd word, swim lanes these type of regulations will be conducted and what agency will do that. So the US is still thinking about this, but it's in very, very active discussion. Also, certain things under crypto trading and exchanges are not enforced. Like in American traditional brokerage firms, know your customer rule, the fiduciary best interest standard, they're not really enforced in the crypto world. Now, there's also a big regulatory interest in the crypto exchanges to prevent fraud and to promote fairness, like other securities exchanges are governed. And also a big concern about just basic security measures, anti-money laundering, prohibition on front running, and that is the misuse of customer information to trade for gain. All that's being looked at actively right now. Some have had technical bottlenecks and glitches during times of extreme volatility and price fluctuation of cryptocurrencies. Can these exchanges handle high trading volume so that the execution of the trade, the fairness of the trade, and consumer protection are all in compliance? New rules are going to probably be set in these areas. And the challenges to crypto anonymity have even gone after the hackers. So you think you're kind of anonymous? Well, maybe not that much. Remember the Colonial Pipeline ransomware attack? Later on, the FBI recovered a lot of that Bitcoin ransom following the blockchain and other methods that perhaps I don't really even know about, but they got a lot of it back. So hackers, as they do their ransom stuff, they're demanding ransomware payment in Bitcoin. And I'm asking you all rhetorically, does that give some value to Bitcoin? Because Bitcoin is the only form of payment the hackers are going to accept. So will corporations, fearing a ransomware attack, stockpile Bitcoin with the hopes they'll never have to use it? And if they do, they pray the FBI can recover some of that Bitcoin like they did with Colonial Pipeline. Now, here's a big, big area of Bitcoin risk, and that's speculation. Bitcoin trading is driven by sentiment and risk. And check out these numbers. The Visual Capitalist, as reported by the Wall Street Journal, has indicated the following about major Bitcoin sell-offs since 2012. There have been 14 sell-offs where the drop has gone 30%. There have been 6 more sell-offs where the drop has been more than 50%. And check this out, 3 more sell-offs with a drop at over 80%. Now, some of these drop-offs, these scary volatility in Bitcoin, have been followed by periods of flat trading. And the price is not moving up and down, it's just flat. And some are calling that a crypto winter. So think of this. These sell-offs and the instability they represent might cause experts to poo-poo the idea of Bitcoin or cryptocurrency as an asset class. It's just too volatile and too unpredictable. So let's say you want to save for retirement, like a Roth IRA, a regular IRA, or 401k. Putting cryptocurrency in a retirement fund, probably not the best idea. And you'll likely be saddled with high fees and high costs, and plus all that high volatility. Many 401k plans are not likely to offer cryptocurrency as an investment choice. So here's the big problem with crypto and retirement. If you're nearing retirement or even in retirement, think about you've got some crypto in your retirement plan as an asset to live off of. You've had one of those volatile days and now it's crypto winter. You don't have a lot of time to make that up. So trading in Bitcoin is better done perhaps in taxable accounts as a risk part of your portfolio, very separate from retirement. And that's why active Bitcoin trading can keep your eye off the ball for some of these other more basic investment functions like retirement savings. But here's a way a lot of thoughtful financial advisors and investment managers are looking at Bitcoin. They're putting it in a risk capital category in asset allocation, say 1% of an aggressive portfolio. Now, another concern is there's no recourse if Bitcoin is stolen or you lose the key, the code to find your Bitcoin that unlocks it in the digital cyberspace. There are storage risks with the exchanges, as I've alluded to, because of the lack of effective regulations and even the lack of sanctions. And we also have, folks, the manipulation of the Bitcoin price by celebrity influence that can drive the prices up or down. And recently, we've seen a lot of action in this NFT world, non-fungible tokens in the art market, and prices are very volatile. So be watchful in that area because that's an indicator of additional volatility. But here's another source of risk and concern. It's the power of other countries. So some countries are looking at the idea of a digital currency to help with speed up electronic payments and to bypass legacy payment systems. And China is doing pilots. They're trying to eliminate some transaction fees for merchants and replace paper money, the yuan, and coins backed by their central government and their central bank, their fiat money, and converting to a digital wallet that generates a QR code when folks want to pay. And the private paying platforms, WeChat Pay and Alipay, are in place. But this new thing that China's talking about would be in direct competition to those private payment systems. And the government would gain access to transaction data and track money laundering and terrorist financing. So when you think about it, a government-sanctioned fiat currency in cyberspace is the opposite of Bitcoin and even some of the original principles Bitcoin was founded on. So China has been recently cracking down on unregulated currencies. And will we move into an era of digital currency wars as different central banks decide to go digital or complementary digital with their paper money to affect less costly international transactions? And what are the implications of that unknown space with Bitcoin and cyber currency? So the goal is faster, cheaper payments and to root out money laundering. But if a government has the power, could a government have the power to shut down or discourage the use of crypto through intermediaries and banks? And just a few months ago, China actually announced that constriction in that area and it sent the price of Bitcoin down. So stay with us just a few seconds. I'm going to give you what might be the most important thing I'm sharing with you today about risk and rewards on Bitcoin. And these are essential Bitcoin takeaways. And by the way, hit that subscribe button and the like button. This helps get our content to more people and others who want to learn. And also set that reminder bell. It's all free, non-commercial, and non-conflicted educational information. Remember, Bitcoin is driven by sentiment and risk. It kind of invites speculation. If you want to be involved in Bitcoin, start small, stay small. Let the asset perform and take profits. There's an old adage in trading. If the investment doubles in value, sell half. If it triples, sell it all. Live the volatility with Bitcoin. Embrace it, but keep it contained into that 1 or 2% part of your taxable account portfolio that is very speculative or risky in nature. There are mutual funds trying to become ETFs in Bitcoin, and please seek out financial advice or do your own research. Now, here's what some folks say you can do. In asset allocation, rebalancing is the kind of the key. I'll throw up the key again. The key to the kingdom in asset allocation. If you have a 1% allocation in Bitcoin, and the price of that position of Bitcoin moves up, and that 1% moves to 2% of your portfolio or 3%, in rebalancing, you would want to sell much of that off to bring it down to the 1%. So you've actually taken profits. You have sold when it's high, and then when that percent of 1% goes below the 1%, that is the opportunity to go back into the market and buy. But it's a way you can harvest outside gains and buy on lower prices and sort of rinse and repeat. So that's a way to kind of contain activity in this new area of Bitcoin. And there will be sell-offs, as we've documented. You can buy on the dip and watch the volatility. But bottom line, what does this all mean to you as a citizen and as an investor? It's an asset class a bit like gold, but it's much more complex, and there are more forces working. We need to watch the trends, the speculative nature of it, and realize these outside pressures, the geopolitical risks, the tech, the blockchain architecture that's underlying, and it's not equal on the different exchanges. The criminal pressures on these cryptocurrencies, and potentially the coming competition. So we've been talking about Bitcoin, rewards and risks explained. So before we end up with a digital dollar or other currency, many unanswered questions remain. And regulation, folks, regulation usually follows a crisis. So could Bitcoin be banned or shut down by a government? One prominent regulator recently said, I don't think so, because that's like banning the internet. But a very famous investment manager had a different opinion. He reminded us that in the 1930s under FDR, the individual ownership of gold was stopped and prohibited. Individuals could not own gold until the 1970s. And after they could go with gold, we had a gold craze for a while. So regulatory coordination is needed by the SEC and the CFTC. And think about what function is Bitcoin performing, not only in your investment portfolio, but in the broader economy. How is it doing its job? You may have heard of initial coin offerings. This is like ICO, but it's really like an IPO. It's like an initial public offering. These are to raise money for new types of cryptocurrencies, and they're often very risky. We don't really recommend buying at IPO prices. Those things have to settle into the market. And there's a whole new area called stable coins. This is cryptocurrency pegged to the value of other fiat currencies, like a basket of, let's say, the euro and the US dollar. You've got to trust the issuer of that stable coin or that stable cryptocurrency. But could it become a digital dollar? And check this out. Stable coins are a substitute. If they become substitute for national currencies, they could trigger in themselves or fuel financial panic if the holders of the stable coins lose confidence in the value of the underlying collateral. And that's coming from some top federal banking regulators. So stable coins suddenly becoming unstable coins. And then there's blockchain that we cover in decentralized finance in another video. So crypto, here are the possible uses: payments, intellectual property, tech, capital formation, the who and how it's regulated, the sanctioning of bad behaviors, security and safety, taxes, record keeping, speculation, different degrees of anonymity from central government. But governments and businesses have an interest in fraud and theft protection, plus financial stability and the encouragement of economic growth. So I've got a companion video that goes with this called "Is Blockchain the Future of Money? And Can Cash Be an Asset?" So be sure to hit that subscribe and like button. Don't forget to share this with your friends who are investing in Bitcoin or thinking about it.